U.S. household wealth declined for the first time in 2 years in the first quarter of 2022 per the Federal Reserve. While at the same time, figures like Cathie Wood that are seen as pretty important players in equity markets, they are forecasting a recession. And we now have the Atlanta Federal Reserve GDP Now tracker, which is the most precise and clear-cut estimate you can get for GDP. They are estimating a negative 2.1% GDP print for Q2, meaning that we are likely already in a recession. We are getting news of more bankruptcies coming out here over the last couple of hours, and that is something we are going to get into here in this video and talk about how we are possibly close to seeing a big flush out event and force share liquidations with AMC stock. So I think there's a lot of upside here in the short-term future. If you guys wouldn't mind, give this video some upside and hit that like button and subscribe to the channel. Thank you guys for doing that. Please enjoy your day. It is America Day, so shout out to everybody that is watching this video, number one. But if you are an American, it is definitely a special day. Nonetheless, let's get to this information. So we are getting some news of bankruptcies that are being announced only in the last couple of hours here, but I do want to start off with a little bit of news that just came out here recently as well, which is directly related to AMC, and it is news of the box office. So Minions: The Rise of Gru tops 108 million as parents flock back to cinemas, kids in tow. Key points: Universal and alumni's Minions: The Rise of Gru generated more than 108 million in ticket sales during its domestic opening weekend. The animated feature represented 58% of all domestic moviegoers over the weekend, with 68% of ticket holders being part of family groups, according to data from Intelligence. The film is expected to add another 20 million in ticket sales in the US and Canada on Monday, bringing its holiday weekend total to 128 million. Now, what is most exciting about this is 68% of ticket holders were part of family groups. Now, what do families tend to do? If dad takes out the family to a movie, you tend to at least get drinks, popcorn, something else, and that is where theaters actually make the most amount of money. That's how theaters are staying in business. They usually split ticket sales, but ticket sales are not the main income for theaters, and without that extra, popcorn, drink, or whatever the case is, then theaters wouldn't be what they are today. They would have been gone a long time ago. So that is very encouraging for me. It's likely that you've seen more people spend more money when they went out to see this movie with their family. So I think that's something to really point out. It's a big fundamental positive thing for AMC stock specifically. Now, let's talk about this whole hedge fund situation. And the hedge fund to officially file for Chapter 15 bankruptcy is Three Arrows Capital. Yes, they have officially filed for Chapter 15 bankruptcy in New York, according to a report from Bloomberg. The mega fund, founded by Credit Suisse traders Zhu Su and Kyle Davies, at one time managed an estimated $10 billion in assets and was a linchpin among crypto finance players. Its insolvency has forced major industry players to reshuffle operations and limit customer withdrawals amid a crypto sell-off that seemed to catch plenty of mega firms off guard. Chapter 15 bankruptcy will allow the foreign firm to protect its stateside assets while the liquidation is carried out in the British Virgin Islands following a court order this week after 3AC defaulted on a $660 million loan to Voyager Digital. 3AC is based in Singapore. The firm's ongoing collapse is causing trouble for plenty of venture-backed crypto darlings. Earlier today, BlockFi announced a deal with FTX US and noted that it had lost around 80 million from its dealings with 3AC. So it looks like they are taking a couple other players down. It looks like Voyager is going to have a pretty hard time with this whole ordeal, and I think that's going to really hurt the overall markets, because crypto, the markets, you could say they're different, but they have a lot of the same players, right? People that were in crypto markets were usually in the stock market and vice versa. So it will draw up some liquidity, and that potentially can get hedge funds closer to seeing some of those forced share liquidations. But I think the forced share liquidations, as far as that aspect of AMC, when we could expect to see something along those lines, is probably when we get a flush out event. I think it's very possible that AMC will hold up well like it did when the stock market was hitting new lows. Back June 17th was actually the low for the stock market. That day, AMC stock was up 6.3%. So it doesn't have to be that the stock market hits new lows and AMC also has to hit new lows. That doesn't have to be the case. So I think it's very possible that that would be a bullish thing in and of itself. It's not a catalyst. It's not something that will directly cause the MOS, but I do think you will see more forced share liquidations, especially as credit concerns start to really weigh on lenders. Lenders can recall their shares at any period, and if the situation gets we'll call it sketchier, and these lenders think possibly more hedge funds are going to go out of business and they won't get their shares back, they won't get their interest, that's where you could start to get some of those forced share liquidations. Now, BOE warns margin call model may underestimate hedge fund risk. Some funds may need to post more collateral, regulator says. ISDA defends this model and says it will engage with UK's PRA. Banks may not be demanding enough collateral from hedge funds to satisfy new margin rules that are set to go live in September, a UK regulator said. The Bank of England's Prudential Regulatory Authority, or PRA, has told banks that a widely used model to calculate margin requirements doesn't appear accurately reflect the risk some funds face in unlisted securities trades. The warning comes just months before hundreds of hedge funds and other firms come under the scope of rules expected to drive up costs in the $12.4 trillion derivatives market. The reforms are aimed at cutting risk in the market following the global financial crisis and will force firms with more than the equivalent of $8 billion uncleared over-the-counter derivatives to post extra collateral known as initial margin. The threat from under-collateralized positions were underscored by the implosion of Argo's Archegos capital management last year, which accumulated leverage through contracts that are traded off exchange. Quote, without firms taking action, some portfolios will risk being systemically under-margined. PRA executives Duncan McKinnon, David Bailey, and Nathaniel, I think that's how that's pronounced, Benjamin wrote in a letter this week, quote, we will expect to see evidence that the risk of under margining is being addressed by individual firms. So you're directly looking at some margin calls happening over here in the UK, and that can also feed into hedge funds in America, because if you trade on the London exchange, if you trade in Europe, well, you're going to have to post more collateral there. You're probably going to have to draw some funds from somewhere over here. If not, you're just going to get a fat margin call. And these two stock markets are very interconnected, right? The US and the UK markets pretty connected overall. That's where you can get arbitrage. So that's why you can actually see AMC trading for a different price over in Europe, but it's going to be pretty close. That's because market makers are allowed to do that arbitrage, and so do hedge funds. When a difference in AMC could only be a couple pennies, maybe a little bit more, you can actually make a lot of money by being in European markets where a stock like AMC is duly listed, and essentially do that arbitrage. So there is a lot of hedge fund activity over there in Europe and specifically the UK, and I think that could boast well for AMC stock and potentially what is to come. Now, I do think the flush out event will be due to margin, because we have not seen the margin debt come down at all. Only about 12 to 15% throughout 2022, and given the Nasdaq is down 30%, I think that could lead for a very precarious situation, we'll just call it that, if we do get more lows in the stock market. Now, for this upcoming week, if you guys did not see the video that I put out earlier, go ahead and check that out, because that will be a big one. But we do have the Fed, which FOMC minutes right here, 2 p.m. on Wednesday. That's basically the transcript of what the Fed said at their last meeting, why they actually went with 75 basis points, and it might give us clarity into what to expect in the next Fed meeting, what the Fed is looking forward to. It's the transcript of the last meeting, so it is important, and that's why it's highlighted in red. It's expected to be a high volatility catalyst event. Now on Wednesday as well at 10 a.m. you have ISM non-manufacturing PMI, and then JOLTS job openings. Those are the new job openings, and you do have Fed Williams at 9 a.m. on Wednesday. So it looks like Wednesday is going to be a pretty big day. Thursday as well, you do have ADP employment change for June, Canada balance of trade for May. It says it's going to be a high volatility catalyst. Not convinced it will be. But then at 8:30 a.m. you do have the balance of trade for May. That will be important for the GDP estimates. If the trade deficit comes in really bad, if we get a more than negative $87.1 billion print, that's the estimate right here. That is not going to be a good thing, because that means we're probably closer to that recession than the markets actually do realize. Because if you guys look at the Fed Now GDP tracker, or Fed Now GDP tracker, you can see that the average blue chip consensus is for Q2 GDP to come in at the high end range of about 4.5% positive, the low end range of about 1.5% positive. The Atlanta Fed GDP tracker is now expecting an over negative 2% print. So even if we come in at a negative 1% print, that's going to be way off the estimate, but I think that shows you just how far we are really have fallen off of a cliff. We were in positive territory last week at about 0.3% expected GDP, to the upside, so not expecting a recession, and then it totally flipped after that data we got on Thursday and Friday of last week. So it does not look like this is priced into the markets. We will get the advanced estimates for Q2 GDP coming on July 28th. At the same time, the Fed will raise rates July 27th, and you will have large cap earnings that will be in that time period. So I think that's when you could get that big flush out to the downside, potentially some of those forced share liquidations. But back to the economic data for this upcoming week. On Friday, you do have the ADP employment change. Like I said, balance of trade as well. And then that was Thursday, my apologies. And then on Friday, you do have 8:30 in the morning non-farm payrolls for June, and the unemployment rate for June as well. Fed Williams also speaks at 11, and then wholesale inventories month over month at 10 a.m. So I think this is going to be an important week for data. It's going to be an important week to see if we get more bankruptcies, some news along that line, because I think you're pretty close to seeing a lot of bankruptcies, and it will be the start of Q3, so it could very well be a big positive thing for AMC. As we do know, the data has been all over the place for AMC, showing the short interest going down, showing the cost of borrow rates going up, cost of borrow max at over 41% currently. At the same time, you're seeing a lot of very bullish option activity. So I do think if I were to put on my fortune teller hat, it's going to be a bullish week, but I really like to pay attention to the macro situation about all of this. When I see bankruptcies, when I see more collateral requirements, margin calls over in on the London exchange, then that gets me very excited for what is to come with AMC stock. And as we do know as well, there are millions of FTDs that will need to be bought back likely in this upcoming week. So that will be all for this video. You guys enjoy your day. Thank you for watching. Hopefully you learned something. If you want to start off this new trading week in the trading community, link down below in the description of this video, as well as links down below for Webull, Moomoo, and Public. Go ahead, get yourself those free stocks. Thank you for watching, and I will see you in the next one.